Good day, everybody. It's Trent Klarenbach with Klarenbach Research. Today is November the 4th, 2024. And looking at this long-term Canaryseed chart, we can see that we are back, testing these previous resistance levels. Now, this 30-cent level is very significant, going back to 1996 here, and is acted as resistance with a few exceptions of breakouts higher, but they were shorter duration, and the price had a prompt sell-off. And that's typically what happens. You get a rise in the price and a prompt sell-off in these low volume niche crops. But, the question we have now, will this previous resistance level act as support? Often it does. And, it remains to be seen if that will happen. And, Canaryseed trades in a higher range over the next coming years. Or will it drop below this resistance level and trade in, more traditional sub 30 price levels? Now, time will tell, and, we're going to look at the charts to see what they offer for clues and what could happen. I'm going to go down to this chart here. This is a logarithmic chart, a weekly logarithmic chart going back 32 years. And I like drawing my trend lines on log charts, and the upper trend line here is being tested. In fact, we're trading a little bit below that upper trend line. Keep in mind, these trend lines should be drawn with a crayon and not with a pencil. And, obviously I drew this with a pencil. So trend lines should probably be in a band. So I would make a strong argument this is trading within that trend line, or that long-term trend line, and just above that 30-cent level. Now again, these trend lines often get retested on the breakout. And so we've been actually calling for a return to these 32, 33-cent level for the past 2 years, and we finally got it. So, what remains to be seen if this trend line holds up, or, we have lower prices. But, these charts can be somewhat predictive. Getting the time right is more difficult than getting the direction. But here we are. And I'll look at this other chart. This is the linear chart, in the arithmetic chart. And the reason I call it that is you look at the y-axis, they're in equal units, equal increments. And the log chart works with percentage moves. And this is obviously a linear move. So it's, I think both charts offer advantages in your analysis. So right now we're trading above that 30-cent level. And again, we all know how important that has been in the past. It's a psychological level. In the past, selling has accelerated when we get to that 30-cent level. Now we'll see if buying starts to accelerate now that we're at that 30-cent level. A break below 30 cents, and I anticipate we'll see accelerated selling in a prompt move lower. But as long as we're above 30 cents, I need to remain, neutral. I'm going to remain neutral on that time frame. I really want to see how the price reacts to this level. Another point on this chart is that Fibonacci retracement level is 78.6% retracement. So that was from the 2021 low to the 2021 high. It's retraced 78% of the move so far. So in combination with the round number of 30, and the fact that these moving averages are quite a ways away from the current price, I anticipate that we will see some sideways consolidation here above 30 cents, allowing these moving averages to catch up to the price. Does it have to happen? Absolutely, it does not. But as long as we're above 30 cents, I'm going to remain neutral. I'm not going to turn bearish or bullish yet, but I'm going to remain neutral. Now, the reason I'm bearish on the longer term time frame is, we are in a downtrend. We are below these moving averages. The trend has started to change down. I looked at that previous chart there. We broke below that upper trend line, or maybe we're trading inside that trend line. And, you just cannot be bullish below declining moving averages. This chart here is the log chart again on a shorter term time frame, and you can see I got some some trend lines on here too. And, they're kind of a best fit trend line, and trend lines, I think the best fit trend line is the most effective approach. And what you try to do is you try to have the most points touching the trend line. I try to do that here. I thought these 2 points here these 2 lows were more significant than these breaches of this trend line. And yeah, you can see we trended, we're below these 2 trend lines. Now what happens is, you might recall, when trend lines get broken, they're often retested. Often, and we don't know when. So if and when are the 2 questions we have. Now, again, as long as we're above 30 cents, I'm neutral. We trade below 30, I become bearish really quickly on the shorter term time frame. But, just see how it holds up to 30 cents. I wouldn't get in a panic. If I don't need the cash, if I have a risk tolerance of holding out for hopefully longer prices, I would maybe hang tough on my Canaryseed and wait to see how it reacts to this 30 cent level. My name is Trent Klarenbach. It's sunny in Saskatoon. Life's good.